What's up, homies? Welcome to another episode of the Homies Real Estate Podcast. Here's your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And together we're going to break down this crazy real estate market. We got another great podcast for you today. Today we decided to bring a guest. We've had so many questions asked about home insurance, so why not bring a home insurance specialist? Someone that can answer all these questions for you. So with further ado, we have Bridgette Martinez. You want to say hi?
Hi, everyone. Thank you for having me, Anthony and Angel.
Of course, we're very excited. First guest ever. We've never had a guest. We do plan to have more guests, but today we're very excited to have you here and answer these questions for us.
I'm extremely honored. Thank you.
Yeah. So, Bridgette, just talk a little bit about your experience. How long have you been in insurance? Where do you work? Where are you located?
Okay. So I've been an agency owner for almost 15 years.
Okay, nice.
And my office is in Downey. I'm on Paramount Boulevard. So I've been there for quite some time. I started out in the San Fernando Valley.
Okay.
So I started out in the San Fernando Valley with an accounting background.
Mm-hmm.
So I just kind of fell into insurance and loved it.
Awesome.
Okay.
Yeah.
And are you with Farmers Insurance?
Oh yeah, I'm sorry. So yes, I've been a farmers insurance agency owner.
Awesome.
Okay.
Yeah.
Gotcha. Is this the only agency that you've been working with, Farmers Insurance, or have you ever worked with any others in the past?
I do work with other carriers.
Gotcha.
But I am a agency owner for farmers.
Gotcha.
Okay. Perfect. Want to get into the question then?
Yeah. So let's go ahead and jump into the questions. First question that I always get asked is home insurance required?
Great question. So is it required? No. No, it's not required unless the bank is telling you, right? Unless you're financing your home, then that would be a requirement.
Yeah. So on the loan side, I'll say that Bridgette said it's not a requirement for like, it's not a state requirement, but every bank, as long as you have a loan with them, they're going to require home insurance until your loan is paid off in full.
Correct.
And then next question would be, what kind of home insurance do you need, right? I know there's a variety of type. There's basic, in my understanding, it's basic fire insurance. Then you could have maybe some insurance that protects your assets, or not your assets, but if you have any jewelry or anything in the house that may be valuable, you can have insurance for that as well. Is that correct, or can you emphasize a little better?
Sure. It is a misconception. Mm-hmm. There's no such thing as basic insurance for homeowners.
Okay.
Every carrier that is out there insures against four what we call perils, natural perils, which is fire, wind, hail, and storm.
Got it.
So those are all covered in a home insurance policy.
Mm-hmm.
What you're speaking about is additional endorsements for personal property, liability, and other endorsements that you could. There's so many endorsements, to be quite honest with you, for a homeowner's policy that can be added on.
Okay,
gotcha.
Makes sense.
Yeah.
Gotcha. And then how much home insurance do I need if I was to get it?
That is such a good question. So the way insurance carriers work, the way we calculate the amount that is going to insure the property is based on reconstruction cost.
Gotcha.
Not market value, which is another misconception.
Mm-hmm.
So the reconstruction cost is based on the current cost to rebuild that property to its current like condition.
Got it.
If there was a loss to the property.
Got it. Okay.
Gotcha.
And to continue on to Anthony's question, do you always do you recommend the endorsements of like the personal property, things like that, or would you, or it just depends on each individual? How does that work?
So it does depend on each individual, because depending on the need, and also depending on the financing that we're looking at, where we need to be at, most policies do already come structured, meaning it's a package.
Okay.
Some may have some personal property coverage. Some may have liability endorsement on it already.
Got it.
Again, my job as the insurance professional is to make sure that in the beginning I ask all the right questions to the buyer.
Got it. To fit the exact policy that meets them.
Exactly.
Okay, perfect. And then a big question is, when do I need to get the insurance, right? Should people start shopping for insurance when they get pre-approved for a home, once they're about to enter escrow, or after escrow, whatever the case may be? When should maybe switch policies, things like that?
So my recommendation is to everyone is to, as soon as you open escrow, you should start shopping for insurance.
Perfect. Yeah, and that's what I recommend
Yeah.
to you guys, is when you guys open escrow, is to talk to probably a couple agents. I'm of course going to recommend my agent, which would be Bridget, or if you guys have someone you guys recommend. One question on that too: do you offer, or do you recommend? I know something that's big is bundling your car and home insurance together.
That is such a great question. I'm glad that you actually asked that. So a lot of agents do focus on the bundling part, right? Because it can offer a potential discount to the client. However, if I have a buyer, and I'm just going to throw this quick example out there, if I may, if I have a buyer who has been with someone like Adriana's Insurance, and all of a sudden they come over to Farmers, it's like, if I can give a basic analogy of going to Walmart and buying a Hershey's, and then going to Target and buying the same Hershey's candy bar. It's going to be a different price. It's going to be entirely different. So it all depends on that buyer of what coverages he wants. And most people, when they're going into a home, they're not going to see a savings on the auto side if they've had very small coverage limits on their auto.
Got it. Okay, that makes sense. Yeah. Okay, perfect.
Gotcha. And then, is home insurance something that you should always have, or is it something that you can get rid of after you pay off your mortgage?
I would never suggest to anyone to get rid of home insurance, because unless you have the funds to rebuild that property yourself in the event of a loss, then okay, great. You don't need home insurance, but for the most part, keep that home insurance. Yes.
Gotcha. It's very much like car insurance, right? Exactly. Like after you pay off your car, you should still have car insurance.
Yes.
That way.
Yes.
If you ever get in an accident, you don't have to come up with that whole entire cost out of pocket.
Exactly.
Sure. Yeah.
And then, as far as I'm assuming this answer is pretty straightforward, but I'll just ask it anyways. If your home does get damaged, you don't have home insurance, what happens to that person? They're obviously going to be liable, right, for all those expenses that occur, right?
They are that they would have to come out of pocket.
Okay.
For that loss, yeah.
And then, as far as say if something does happen, there's obviously no way to get insurance after the fact, right?
No, that would be insurance fraud, and we're not going there.
There we go. Yeah. Just wanted to clarify that for anyone that may have thought of doing that or something.
Yeah.
And you know how there's limits for cars, right? Like you have limits up to $30,000, $100,000, $300,000, depending on the policy. Is it like that for home insurance as well, where there's a limit as to how much you will cover?
Yes, there is. Well, yes. So the reconstruction cost, again, that we use to rebuild a property is going to look different than the loan amount. Gotcha. Let's just start there, right? So that's going to look entirely different, because the loan includes the land, and we're not insuring the land. We're insuring structures on the land.
Gotcha.
Okay. So so the coverage limits are always based on coverage A, which is the dwelling. So they're percentages of that dwelling. Okay. So yes, they will differ.
Awesome.
Gotcha. So my next question is, how much does this home insurance cost?
Good question.
Is there a range?
I'm gonna say yes, there is a range. Standard, let's say a 3-bedroom, 2-bath home, let's say in LA County, it can range anywhere between $700 to $1,000 a year. A year.
Got it.
A year. But there are factors that play into that premium, which is, when the property was built, where it's located geographically.
And I think one question too that, or one thing I've noticed from policies maybe over the last few years is I feel like they've gotten a little bit more expensive. Is that just something I'm seeing, or is that factual?
That is factual. Yes. Inflation has hit us all, as we're seeing now. And so the cost of labor material has gone up.
Got it.
And so insurance carriers have adjusted their pricing for that.
Okay, perfect. And then I guess the last thing is, you've been in the industry for almost about 15 years now. I'm sure you've had some crazy insurance, home insurance policy or home insurance stories where you can share to the people how having home insurance can benefit you, right? That maybe something happened to somebody's house where their home insurance really came in and saved them a lot of money, of course, and more importantly, help maybe rebuild or fix any of the costs that were caused due to this damage.
Okay, so I have two stories. I'll start with one that was pretty impactful for my client.
Okay.
My client who had hired a professional company that was insured to repave his driveway.
Got it.
He did his due diligence. They were insured and bonded.
Mm-hmm.
They started work on his property. However, that contractor hired a subcontractor.
Oh no.
Got it.
And while that person was working on the driveway, the machine that was using, he had an accident and took out his eye and made him blind.
No.
Yes.
Oh my
yes.
God.
And my client, my insured, was not the person that hired him,
Mhm.
right?
Yeah.
It was the contractor
Yeah.
that my insured hired.
Yeah.
However, my client was hit with litigation
Wow.
because of that injury, because that subcontractor said, well, I was working at this person's house because of my boss, the contractor. So he sued my homeowner, the contractor, and he also sued the manufacturer of the tool.
Wow.
And the
Wow.
goggles. So you can imagine that was pretty scary for my insured. How we handled it for my insured was that he had to use his liability insurance to make sure that we paid the damages, because they were over $1 million, and his liability insurance was $500,000.
Wow.
Standard liability insurance on homes, it starts at $300,000 for most carriers.
Got it.
You can go to a minimum of $100,000.
Yeah.
I would never recommend that, because
Yeah.
$100,000 does nothing for you when you're in litigation.
Got it.
300,000 won't do it. 500,000 didn't do it for my client. So
Wow.
we were able to settle for him.
Wow.
But in actuality, he should not have been hit with that. But
Yeah.
that's the kind of times that we live in, because, he hired the contractor, and he failed to ask the contractor, do you hire subcontractors?
Yeah. That's wow.
And
That's a good question. to
That's a
ask now.
technicality.
Yeah.
That's
Yeah.
a small technicality.
Exactly.
And unfortunately, that technicality hurt him. So,
Yeah.
Wow.
So he had
That
a
is
claim
a
against.
crazy
Yes.
story.
Yes.
That's insane. I thought you were gonna say he didn't have to pay anything or any liability.
No.
Yeah.
No. And
Wow.
one of the things that I find in the years that I've been doing insurance, excuse me, is the fact that when we, the professional, try to educate the consumer, sometimes they think it's, we're just trying to upsell you on everything. But the fact of the matter is that no one is exempt to anything happening,
Exactly.
right? And so our due diligence is to make sure that we insure you correctly. But if you choose not to, then there's nothing that we can do, obviously,
Yeah.
right?
Sense. Wow. And then you said you had a second story, if you want to share
I
that
do.
one.
So a second story was that if you're not familiar with the California Fair Plan, they are a insurer that is the last resort.
Yes.
So I had a realtor who helped their client purchase a home. They were tight on ratios, which you can speak on
Yeah,
that.
we can speak
Yeah,
of,
they were
definitely.
tight on ratios, and they went with the California Fair Plan.
Wait, let's stop right there. Angel, for the homies out there that don't know what tight on ratios mean, explain real quick.
So real quick, I won't get, it can get a little bit detailed, but basically when you're qualifying for a home, you have to qualify under your debt to income ratio, which is just a comparison of your monthly debt versus your monthly income, right? So and that is your monthly payment for your mortgage. And of course, included in your mortgage payment is going to be your home insurance. So the more expensive your home insurance, the more it's going to affect your debt to income ratio, right? So sometimes people may want to have a cheaper home insurance just because they're already close to their absolutely max that they could qualify for. And if their insurance goes up a bit, then they will no longer qualify for the house. So I'll just leave it at that. Just try to keep it simple. But essentially, the more expensive your home insurance could affect how much you qualify for.
Yes. Thank you, Angel. Sorry for interrupting.
No. That's great. So what happened with this client is they were tight on ratios. They went to California Fair Plan.
Mm-hmm.
They had a total loss. The house went up in flames. I did not insure this property, so
Oh my goodness.
I'll just add that disclosure. Yes, they had a total loss, and California Fair Plan said, whoever put the reconstruction cost in didn't insure you for enough, so they didn't have enough money to rebuild their home.
Wow.
So they had to. So I can I speak on that for a little bit, because when it's so important that the insurance professional that you're working with, if we're tight on ratios, I understand, right? We understand that. But my due diligence is to follow up with that client and say, hey, you're in the house now. We need to get you this other insurance. We need to get you the other bells and whistles, right? Which you can do as an added endorsement.
Got it.
But unfortunately, if it's not done and, the customer is so comfortable with their new premium of $300 a year versus wanting to spend now an additional $200, right?
Exactly.
It takes them out of the comfort zone. So, it's truly important for lenders and insurance professionals to work together to educate the consumer on that part.
So what happens in an instance where, let's just say someone's coverage is, $200,000, and the reconstruction of the home is going to be somewhere in the ballpark of $400,000. So it's not going to cover the entire. Do they have to come up with out of pocket that additional $200,000? How does that work?
Yes.
And then let's just say that they don't have that additional $200,000 to come out of pocket. Does the home insurance just pay them out here? Here's $200,000. Do with it as you may. Is that what happens, or what happens in the instance that they can't even reconstruct it, but they still have a policy?
They would. Legally, they have to pay out what the insurable amount. Anything over that would be the homeowner's responsibility.
Gotcha. It makes sense. And then we didn't have this on the segment as one of the questions, but I think it's important to ask is when can you switch your home insurance? Like once you already bought your house, can you switch the day after you close? Do you have to wait till your end of the year premium is up, and then at that point switch your premium to another provider? How does that work?
If we're in escrow, we're in escrow, and once we close escrow, and the buyer wants to change, he can change at any point in time after that. I would never suggest to close in the interim of escrow. You don't ever want to do that. You want to do that after, especially if they want different changes, for their
Makes
policy.
Sense. Yeah. Okay, perfect. I think I covered all my questions.
Yeah, I think that covers everything, Angel. And I know you kind of touched on this a little bit during the ratios, but home insurance is something that's typically already baked into your mortgage, right? It's something that you typically, taxes, mortgage, home insurance. If you have
property
taxes as well,
and mortgage insurance.
And mortgage insurance, that's all already kind of baked into your mortgage. So it isn't like it's an additional expense that you're not really accounting for. You should already be accounting for home insurance as one of those expenses in your mortgage. So I just wanted to clarify that for everybody. But with that said, thank you so much, Bridgette. Where can we find you on social media?
You can find me. My Instagram handle is Queen B of Insurance.
Queen B of Insurance.
Yes.
So that's
there we go.
Queen BEE, like a bzz.
Yes, I am the Queen B of Insurance. That's what I named myself.
Oh my goodness,
we love it. Love it.
Queen B of Insurance. Recommend following her.
There we go.
And then Angel, where can we find you?
At Your Mortgage Angel on Instagram.
At Your Mortgage Angel on Instagram. You know where to find us. At the Luevanos Group. If you want to watch this on YouTube, highly recommend it. If you haven't already, please subscribe. And with that said, I do want to wish you all the best. Take care and stay safe, y'all.
Hey homies, it's Angel from the Homies Real Estate Podcast. This podcast contains our opinions and is for educational purposes only. It does not guarantee any projections and should not serve as the basis for any purchase or sale in real estate.